think we've had a very graphic description from Tumi there already on figures of the challenge that we have in front of us. And the Minister of Finance would know better than anybody what that amounts to in terms of challenge. This particular session is called To Build or to Buy. Are capital allocation and financial discipline adequate? Is that enough to meet demand for minerals? To address that, let me introduce our panel first of all, briefly. As I said, His Excellency Mohamed Al-Jadaan, Minister of Finance. Thank you very much for being with us, Minister. Benjamin Galzo, who is the International Delegate for the Provision of Strategic Minerals and Metals at the Office of the President of France. Benjamin, thank you. Kent Masters is Chair and Chief Executive Officer for Albemarle, a leader in the production and mining of lithium and bromine. Tom Palmer is President and CEO of Newmont, which is the world's biggest gold mining company. And Jeremy Weir is Chairman of Trafigura, one of the world's largest suppliers of commodities, so connecting producers and consumers of minerals and metals and indeed energy. Gentlemen, thank you all very much indeed for joining us. I think we got a clear impression from the introduction of the challenge in front of you. There is no question that the accelerating demand for minerals is not going to go away. In fact, it will continue for years, decades to come. And it is incumbent, I think, on this whole sector to deliver, because without it, there is no green transition. And in the process of delivering, I think it's fair to say, there is also a recognition that the resource-rich countries need to benefit in a manner that suits their communities and their economies. And after all, I think it's fair to say that in many of those places, these are communities already hit very hard by a changing climate. So it's a double whammy in that respect. Minister, I'd like to start with you, and I'm going to start with another double whammy, which is really two questions in one. Deep pockets help a lot in terms of funding these sorts of things. So it would be interesting to hear what the Saudi imperatives really are in terms of budgets, in terms of investment into the minerals sector. But at the same time, it has to be more than just money. And what are the lessons that you have learned in this country over 70 years of extraction, effectively, of that mining process that you think come into play now for building a resilient, a lasting supply chain?
Thank you very much for having me, and thank you, Your Excellency Bender, for organizing this very interesting forum. I'll try to be brief. A lot of lessons are learned through the process, and I would possibly single out few. One is critically important, is really alignment within sectors. If you want to do the right thing within the mining, it is not the mining alone that will make it. You will need to make sure that you align multiple sectors together: energy, mining, logistics, and possibly even few others. And that's what we have done in Saudi Arabia now, under the National Development and Logistics, National Industrial Development and Logistics Program, which is bringing all these connected sectors together to ensure that it works collectively. I think the second part is the power of data. You know, without really adequate data, you cannot develop any sector, and mining is no exception. And there was a real focus on making sure that we make an investment early on data relating to mining, including this, specific technicalities, and including budgeting for supporting surveys throughout the mining sectors, and actually providing even support to companies who are coming for exploration. Third, which is very critical, is the regulatory framework. And unless you have a very competitive regulatory framework around the sector, it is going to be very difficult to attract the right investments. These are long-term investments. Investors would need to we need to have predictability. We need to have confidence on the regulatory framework. We need to make sure that it is friendly. They are able to get their licenses on time with certainty. And the last point, which is as important, is actually catalyzing the power of partnership. This is a very complex industry that requires significant investments that the government alone cannot do. It requires significant know-how that the government alone cannot do. And you need to make sure that you actually partner with the private sector to enable the sector. A lot of areas we can talk about, but I would stop there with these four that I think are important.
Well, you've given a very clear steer as to where the investment and budget interest is and the areas where you feel it needs to be applied. Let's have a chat with some of the people right at the heart of that industry. And Tom, I'm going to start with you if I can. Newmont, world's biggest gold mining company. In fact, you should have been here last year, but you were too busy building up that company and taking over Newcrest. So can I just ask you, the question is build or buy. It's about financial discipline at this stage in our discussion, at least. Where are you now? You're consolidating clearly, but is that to scale up? Is that to expand your sector of mining?
Yeah, thanks. So thank you for having us here this morning. We've been on a journey and a perspective 12 months later after closing the Newcrest acquisition. It's a journey we've been on for over 6 years now that's been informed by a clear strategy around assembling the world's best portfolio of tier one gold assets that allows us to have a portfolio that's long life and then make some decisions over the long term. Gold mining companies typically gold mines typically have shorter lives that drive shorter term decisions. So it's the Newcrest acquisition combined with our acquisition of Goldcorp back in 2019 and the formation of the joint venture in Nevada. Those three transactions have transformed our Newmont portfolio to the one we have today. 12 months after closing that transaction, we've been through a year of integration, which I believe is harder work than the actual acquisition. Rationalising the portfolio and transitioning to a go-forward portfolio that's exclusively Tier 1 operations and has a project pipeline that allows us to increase our exposure to copper. So when we think about a Newmont, that, as you described it, it's the largest, but we're not getting big for big's sake. It's about being about 6 million ounces of gold, but being able to develop our project pipeline so that we grow our copper where the world needs copper. When I think about that question, to build or buy with that perspective, two things come to mind. First one is capital allocation, financial discipline are essential. They're foundational, but in and of themselves, they won't get you there. Operational discipline, the capability to develop projects, the ability to manage community relations, external relations, government relations. Partnerships are going to be critically important with these big projects. They won't be built by a single company. Many of these big complex projects will be built in partnerships. So building out a set of capabilities within an organisation that does much more than just allocate capital with discipline to manage the finances will be critical. And the second perspective for me is I don't think build versus buy is a mutually exclusive argument. Right. I think if you have a clear strategy and it makes sense to buy, then that can be part of how you develop and strengthen your portfolio. But the demand, and in our perspective, copper, the demand for copper is so huge that we will have to build. And building that capability and the partnerships to build is going to be a very important part of our mining industry meeting the world's demand for the metals of the future, and in particular copper.
Just before I bring Kent in there, you talk about the importance of establishing longer-term predictability, and of course you can move into copper. But there is a problem with everyone has this problem in terms of investment and readiness to invest because it's a risky business. and things change over the longer term. So if you stick to financial discipline, do you have the scale to invest now for the future?
So the starting point is having a set of genuine tier one assets, so having that life and strength out in front of them so that you can work on cost and productivity improvements that are growing your margins. Then you've got the confidence that through a commodity price cycle, whatever that may look like, you are generating the cash necessary to reinvest back in your business to grow, and that growth can either be improving margins, top line growth in terms of metal production, or life of your portfolio. But you won't be able to, with confidence, grow those margins over time unless you've got a portfolio of tier one assets. It's a fundamental starter for us.
Right. Kent, you've experienced commodity price fluctuation in extremis, I think it's probably fair to say, within the lithium world. Does the maths work for you on financial discipline and expansion through investment? I mean, it's expensive. It's a very complex world we live in with plenty of geopolitical challenges as well. How does it fit for you?
Yeah, I listened to Tom, and you talk about tier one assets. We tried to build those. I think we have tier one assets in the lithium space, and we're trying to build that out and invest along with that. And we built a capability to do that. We thought we had financial discipline, and the markets changed on us. What we thought was would be a bottom of a cycle, it went straight through that. And so it's creating challenges for us. So we need capability, skill set, understanding the resource and the chemistry around it. We think we have that. I don't generate the cash to do what I wanted to do now, so we've had to pull back and invest less. We were trying to lead that move of a diverse Western supply chain, and frankly, I don't have the cash to do what I wanted to do in that regard, so we slowed down on that.
So how do you change that? How do you energize investors and indeed shareholders to think, no, we can invest. It's not as big a risk as perhaps some people would think it is.
Yeah, I think there's, a couple of things in this particular space. So I don't pretend to know the broad mining space, but in our space, I think there's a lot of cooperation that needs to happen between companies, between countries, and between countries and companies to lay out that plan and show some leadership globally to build these supply chains for these materials, because I don't think individual companies can do it on their own. We don't have the balance sheet for it. Maybe some companies do, but we don't have the balance sheet to do that ourselves. So I think there's a lot of cooperation. There's a lot of innovation to happen in that. And I think, again, it's going to be between companies and for markets. No one company is going to solve everything.
These are, Jeremy, challenges for individual companies quite clearly, but there is a bigger picture as well, which is to provide the minerals across the piece, across the world, ever-increasing amounts of minerals too. How do you build those resilient supply chains I mentioned just a moment ago in what is an extremely complex, tricky world now?
Thank you, David. It's a pleasure to be back here in Red for the Future Minerals Forum. Look, you're right, it is a very complex, fragmented supply chain world, highly volatile. And actually there are certain economic and geopolitical advantages of actually controlling the whole supply chain, and we are seeing that in certain sectors by certain countries. If we sort of step back and sort of look at not only the challenges of supply chains, but also the challenges of meeting the supply demand for the future, we're expecting, in most metals, an increase in demand by about 50% over the next decade. In the battery metal sector, or specifically in electrification, up to 100%. So very significant increases. And this is very important because it's not just it is typically obviously for the energy transition, but also for power gen, electrical transformation, industrialization. And this is more important, to me it's important because it's actually it's very sensitive for governments. Because whereas before internal transport was major and some form of building might have been a huge demand for metals, this is more about security, and it's having a very big geopolitical impact in the world. And if you look at some of the reactions that governments have had, for example, last year when we saw the banning by the US of high bandwidth chips into China, there's a retaliatory action by stopping supply of germanium, gallium, and antimony into the US. So we've got a very challenging world with highly fragmented supply chains, and I think it requires a lot of work to try and sort of resolve this problem.
Markets don't like uncertainty. We've got a new guy in the White House in a couple of days, which I think there's a lot of uncertainty still as to what the direction of travel might be. But Benjamin, this is an important issue for governments, isn't it? How do you establish resilience? How do you de-risk, if I can put it that way? And how can you work with the corporate world to do that?
Hello. First of all, I would like to thank the Kingdom of Saudi Arabia and especially His Excellency, the Minister for Industry and Mineral Resource, for organizing once again this wonderful Future Mineral Forum. It's an outstanding forum and a big success, and I'm very proud to be a part of it. So first of all, this question of extraction, refining, and recycling, because it's a cycle. It's not just the mining sector, it's a whole supply chain. It's a key question for, I would say, the world economy and the energy transition, because we need these metals. And I would say the geology and the resource is there, the skills are there, the technology is there. So this is a positive thing. I think if we look at the worldwide resource, the resource can cover the needs of our industry globally. But there are two questions, and these two questions, we address them in France with our policy, but also mainly through international cooperation. And international cooperation, it was said, is a key question. So there are two issues in my view. The first one is bringing capital to this industry. Once again, it's the whole supply chain. And we have to consider it as not only extraction, but refining and recycling. Currently, there is a mixed view of this sector by the financial market, and our duty with our partner is to bring some more capital, to convince investors that this is a necessary activity for the green transition. So that's the first point, because
just staying on that first point for a moment then, this is a forum about action. How do you do that?
Yes.
How do you make that step?
So
or is that point
how do we do that? First of all, we have created a 2 billion euro investment fund with a private company called Infravia. The French government is putting 500 million euro in this fund. It's a significant amount of money. And this fund will invest in projects for recycling, for extraction, and refining of metals all around the world. They will be able to take minority stakes and to put some equity, I would say, on the table to develop this project. That's the first two. Second one is we are bringing our development agency, Agence Française de Développement, and its banking arm to finance mineral extraction and mineral recycling. It's very important that all the development agencies in the world jointly invest, and it's true that the World Bank is doing that also, because we need, in some countries, development money to help this project. And then we also provide government guarantee for loans for this project. So, it's not just word, it's concrete action. These resources are on the table, ready to be used for good project, and we are very keen to team with other countries, of course European countries, but also Saudi Arabia, and we signed yesterday an agreement with Saudi Arabia, and the purpose of it is also, of course, to work here in Saudi Arabia to develop resources, but also all around the world. So I would say all the governments have to make this effort and to cooperate together, and that's what we are doing in France together with the European Union.
Right, that's really interesting, and branching beyond just the French government reaching out to various projects, and I'm presuming those projects will partly be about technological advances, but also about geographically the best place to be putting new processing plants or the like. Can I just put it undiplomatically, 2 billion euros doesn't really scratch the surface, does it?
No. You're wrong. Because 2 billion euro is the equity side. It's a minority share. So if you consider what you can leverage with 2 billion euro, it's more than 10 to 15 billion euro of investment. If you multiply that, if each country that is able and willing is doing that, then you have hundreds of billions of euros, which is significant. You know, the mineral market is a big market, but it's not thousands of billions of dollars. It's more hundreds or 200. So these are significant amounts, and I think that the question is to mobilize it and to also to have the very best sustainability criterion, because the whole private capital market will come to this activity if the sustainability is perfect. I mean, the best one.
Yeah.
Nobody's perfect, but the best one.
As good as it's going to get at the moment. Could I throw that down the line, gents, to you're in the business. This idea of partnerships with government, Tom, how important, Jeremy, how important is that? How is that going to play into your game?
Look, I think, as I was highlighting before, we've got a highly volatile environment at the moment. We've also got, if you like, some government sponsorship in some areas which are driving sort of cost down for some participants. So it's not, if you like, a level playing field around the world. And what we've got to try and do, I think, is to recognise that. And if you like, governments have to play a role because if we look, for example, at the smelting industry, you will not, as a private investor, invest in the smelting industry today. The returns are not there. But that's very important in the entire supply chain. So we have to sort of think outside the box. How do we try and support various industries to meet the demands of metal for the future, resources for the future? And I think government support for, you know, if you like, price underwriting to reduce volatility, you know, rapid permitting, providing capital in some form or other, together with the private sector to try and make this a diversified supply source around the world.
Rapid permitting, one of the issues, Tom, I'm sure every miner feels the same. It's got to be a quicker process. But I just wonder how you respond to Benjamin.
Yeah, I think when I think about the demand, in our world it's copper and a key metal both for the energy transition, and you think about the growth of AI and the demand for data processing and the copper required for that. We currently as an industry, in that build versus buy argument, are crueling ourselves with understanding of the capital intensity and working through whether we can justify the development of a particular project. If we're going to meet that demand, we have to break through that. And if we're going to break through that, then we need to do that in partnership. We as mining companies need to think about how we work together to de-risk, to provide the capital for these large, complex projects. They're capital intensive, they're many, many years to develop, and they're very, very long life. How do we think about our relationships with the local communities such that they are true partners in the development of the resources and they're getting a benefit from those resources that far outweigh us? How do we approach those relationships? How do we work with governments to take the incentives that the Minister was talking about and build them into these projects such that we can take a risk that we wouldn't take if we're an individual company trying to work our way through an argument around the return on this particular project. Unless we're able to work together in partnership and break through some of those traditional hurdles in our industry, we won't be providing the metals that the world needs in the next 10, 20, 30 years, 40 years.
Kent, a quick word, yeah.
Yeah, I'd just jump on a couple of things that Jeremy said. So smelter industry, that's a good example. We're kind of, the processing side of lithium is moving in that direction a little bit. But I think there is a lot of room for companies to collaborate, but with governments. So I'd said companies collaborate, governments, and then governments and companies. I think there is space there for that price stability that helps us get through investment returns to allow us to build those processing facilities. We need a global, diverse supply chain, and right now we're kind of stuck, and that the returns aren't there. Private investment, I don't think would do a smelter project. I don't know if they would do a lithium conversion project today.
Maybe just a point.
Yeah.
I agree that this volatility issue is very important. But I think also the mining industry or the metal industry and the downstream industry have to discuss together on long-term contracting. Because if you want to reduce the volatility, you also have to accept to contract on a long-term basis. I mean, you cannot have, both ways.
Right, but I'm in both sides.
Yes.
I have resource and conversion.
And then, with the government cooperation and government support, and with this long-term contract, we can develop this project. For example, in France, we have increased the recycling capacity for aluminium by 50% through this kind of cooperation agreement. We are building new recycling of copper. We are working with several countries around the world and other partners to see how we can build new copper refinery to supply and to transform locally the copper and then ship it to Europe. So I think there is this cooperation, but the long-term part, I mean, long-term contracting is a key question if you want to reduce volatility. You cannot just trade on a short-term market and hope that the government will, compensate the price. You also have to engage into this long-term contractorship.
It feels like short-term is a dirty word at the moment in terms of
I think that also needs to
briefly, Tom. I want to then come to the minister.
I think that needs to be a win-win arrangement as we work through developing concepts like you're talking about. I grew up in Australia in the coal and iron ore industry before China came along, and the price was controlled. So there was stagnation in the development of those resources because I don't think we had a win-win in terms of who was taking those commodities and developing it for the industry. And we're probably still paying the price for that 50 years later.
Yeah, there are different models out there which are working in different ways. Minister, Tom mentioned also the importance of recognising the resource-rich countries, developing countries, if you like. I know you're chair of the IMF Committee for Developing Nations at the moment. What is your message to those countries in terms of benefiting and maximising their potential at this point?
Few things. I think we are running out of time, but I just wanted to cover one point which was discussed earlier. First of all, I don't think there is one size fits all in the mining sector. So you will need to look at individual components and think about how you are making it possible to attract really private money. And for that to happen, you need just possibly to do backward engineering in terms of what is really the adjusted return, risk-adjusted return for that investment. And then there are certain parts of the mining industry that you will provide more support as government in terms of possibly subsidized logistical services, more cheaper and possibly longer-term view on royalties, exemptions and certain royalties. Others with less risks, you can actually be more baseline regulatory and incentive framework. Back to your question, I think it is very critical. A lot of the developing nations, particularly the south part of the world, has significant endowments of minerals and metals. And they are able, with the right setup, really to actually utilize it not only for the mineral and metal industry, but as part of a package of economic development. Obviously, you will need the money, and a lot of them lack that capital. You will need the know-how, and a lot of them lack that know-how, and you will need significant talents that a lot of them possibly lack the right training of that talent. And then governance, okay, which is very critical. For nations that at least are willing, there is a way. There is partnership with multilateral institutions who are willing to help in governance and capital and catalyzing private sector. There is obviously a need from the government itself to provide the regulatory framework that gives that confidence, but then you can bring multilateral institutions to provide confidence for the private sector to invest. I mean, if you bring MEGA or the IFC, for example, of the World Bank, that will bring a lot of comfort to the private sector. You will need also to help your own talent to become up to skills, to attract the right investments from the private sector.
A cheeky little question to add to that. What about those nations that are not so ready to fit into that mold, but they are resource rich? And this is a race to gather minerals if we're going to be in time for a green transition. How do you respond to those?
I think the multilateral institutions have a serious role to play. And We did it in Saudi Arabia, and I think multilateral institutions are doing it, which basically make your support to these nations conditional on them improving their governance and them doing the right economic policies to actually help their own nations. I think we are seeing an impact on that in certain countries in Africa. If we do more, I think we'll see even more, and we will secure our own needs, but also will help these nations.
I think we are pretty much up on the clock, if I'm honest, but I did want to ask one other question, which perhaps we can run down the line here. Maybe start with you, Benjamin. There is still an issue about, this stuff costs money, it's expensive, and is it time to insist on premiums paid for greener minerals? And there are car makers who insist they must have green minerals, and they must be sustainable, they must be transparent, they must be certified, etc. But they don't particularly want to pay for them. Is it time for change?
No, I think it goes back to the question I mentioned of long-term contracting. If you contract on a long-term basis, then the question of this kind of premium is different, because there is no real, at 10 or 15 years, there is no market price. So you cannot decide if it's a premium or not. So the question is much more having a commitment on both sides to buy on long-term basis with sustainability requirements. And I think the government can also help that through financing this kind of operation. And that's what we are doing. And I completely agree with you. The role of government and multilateral institutions is key, because we can help, notably in developing countries, we can bring together money to develop this project, but it has to be with sustainability requirement and long-term security of price. And I think it's a win-win situation. It's good for the extracting industry because you have stability, and it's good for the customer because you have predictability of price. And if you are a car manufacturer, stability of price is important, because you will not change each 6 months the price of your car because of the price of the metal. It's not possible. So I think it's possible, and I'm not naive. It's not so easy, but I think through this kind of new type of contract, and frankly, it's new for both of these industry. They have to discuss that, and we help them. We do that at the international level, but also at national level, to have a new kind of contracting and new kind of long-term commitment.
Okay, I'm just being told time is up, but Kent, really very briefly, this is about a call to action here. What action is required?
Well, I like to comment on the sustainability and that. I mean, I think everything you said makes perfect sense. You have to get people to agree to that. We tend to think of long-term as 5 or 7 years. These are 20, 30, 40-year projects. So we have to change our time frame in order to get that to work. We've tried to do that, and we can't get partners to agree on the other side.
Tom.
Green premium is not the solution. The mining industry's reputation is what we need to work on. We're doing work right now on the consolidation of the mining standards, so we have a consistent set of standards that the industry should meet, and we should expect every mining company in any jurisdiction to meet those standards, or you don't buy their metal.
That's very clear. Jeremy?
Look, we have to decarbonise. I think that's understood. I think demanding a green premium is not the way to do. You have to change consumer mindset, and you have to think about some form of carbon taxation to really implement decarbonisation processes. It can't be driven from the supply side. It's got to be driven by the demand side and government intervention.
You have, gentlemen, given us the platform on which the next 2 days of forum will develop these arguments and thoughts. Thank you very much indeed for your contributions, for kicking off the forum today. Ladies and gentlemen, our panel.
Thank you.
All right. Thank you.